How much can you contribute to your pension? Any amount you want. You can contribute 1 million. But the NHS pension is not a matter of addition and subtraction. We use something called pension growth. So pension growth is basically at the beginning of the year, at the end of the year, how much has your pension grown? If you've put in £20,000, the government comes in and says, look, Chimex, you put in 20,000 in your private pension. We've taxed you on this money already because this money is coming out of your pocket. We shouldn't have taxed you in the first instance. So here, Chimex, take your money back. Most people get the 20% and they relax and they're fine, but not you, because you know better, because you attended the tax hack. If you're a higher rate taxpayer, you need to claim the extra 20%. Right, now let's move quickly to the next allowance. We've already touched on it, so that should be quick. Is your pension allowance. And again, workshop, I'm not doing all the heavy lifting here. Tell me in the chat, how much for an adult working and living in the UK, how much can you contribute to your pension? Is a trick question. Yeah, I knew many of you are going to rush and say 60k. I'm just being a bit naughty. How much can you contribute to your pension? Any amount you want. You can contribute 1 million. Okay, you can contribute 2 million. Now, here's the question you thought I asked. How much can you contribute to your pension and get tax relief for? These are two different things. It's £60,000, okay? So you can contribute up to £60,000. But again, that 60,000 includes how much you contribute to your pension, how much your employer contributes to your pension, how much you contribute to any private pension, and how much the government contributes to your pension. And you're wondering, does the government contribute to my pension? Yes. If you put your pension inside a private pension, the government will give you back whatever tax you've paid on it, 20% back automatically. So all that must not exceed £60,000. Okay. So in a tax year, starting from April, the tax year starts in April, ends in April. So in a whole tax year, you're allowed up to £60,000, which is really important because, like the example also gave at the beginning, he was able to put in some money to his pension, but you must not enter the trap where a lot of senior NHS medics have fallen into. If you put too much money, you cross that 60k threshold, HMRC then, gives you a penalty. Now, up to like 4 or 5 years ago, I think it was just 2 years ago that they changed the allowance to 60k. It was 40k for a while, then it's been increased to 60k. So that 60k, most people never really make use of their full 60k allowance because they don't even know about it. I'll give you a practical example. Let's say you work for the NHS and you earn £100,000. 12.5% is deducted from your pension. So 12.5% is what you're contributing to your pension pot, and your employer is paying another 23.7%. Okay. Now the NHS pension is not a matter of addition and subtraction. We use something called pension growth. So pension growth is basically at the beginning of the year, at the end of the year, how much has your pension grown? It's also called pension input amount. Let's say that after your contribution and your employer's contribution and the adjustment for inflation and everything, your pension growth, aka pension input amount, aka how much of your pension allowance you've used for the year, let's say is about, I'll say 40,000. Okay, and that's being generous because it might probably be somewhere around 35 or 36. Now you've got a whole 60k. I've used up 40k. That means you've got another 20,000 allowance that you haven't used. Most people don't know about this. Some people know, but they just are not sure of how to work out how much to contribute.
Here's how to avoid the 60% tax trap as a doctor or healthcare professional. This could actually literally save you thousands of pounds because you could be unknowingly paying an effective tax rate of 60%. Now, many doctors think that the most tax they pay is 45%, but that's not right. You may have fallen into the 60% tax trap due to a sneaky rule about personal tax allowances. Now, let me tell you how it works. Everyone, especially in the UK, Northern Ireland, England, and Wales, has a personal tax-free allowance of 12,570. Once you exceed 100k in income, you start to lose that tax allowance, and by the time you hit 125k, it's almost like you're punished with this sneaky 60% tax, because your effective tax rate becomes 60%. You've lost all your tax allowance. Now, I've done a guide that will tell you step by step how this works, a checklist to check if you are falling into it and how to avoid it. Thousands of medics have already used this guide to save thousands of pounds and secure their financial future. Don't miss out. Download the guide with the link in the description, and I hope it helps. Let's jump right back to the episode.
So now if you decided, well, it's 100k, I'm fine, I'm not going to do anything about it, that's fine. But if you said, well, it's 100k, but I made another 30,000 in locum, I don't want to have to pay this blooming, I don't want to lose my personal allowance. You could decide, you know what, I'm going to make use of my full allowance. So I'm going to put £15,000 into my pension for this tax year. And once you put in that 15,000, you get an automatic gross up. What that means is that the government grosses up that money. They will give you 20% gross value. What that means in practice is that if you put in 15k, you're going to get 25% of 15k on top of the money. Now, don't be confused. If I say 20k and 20%, I say 25%. Don't be confused about it. It's 20% of the gross, which is equal to 25% of the net. Again, I'll give you an example. If you've put in £20,000, the government comes in and says, look, Chimex, you put in 20,000 in your private pension. We've taxed you on this money already because this money is coming out of your pocket. We shouldn't have taxed you in the first instance. So here, Chimex, take your money back. So what they are doing is actually, they are going to give you 25% of the 20k you put into your pension. But they are not looking at it as 20k. They are looking at it as this money was originally 25,000. I took a bite out of it. We took 5,000 out of it. So now we're going, that 5,000 we took out was 20%. 5,000 is 20% of 25k. So now we're going to give you back that 20%. But for you who has put in the money in your SIPP, you've only put in 20k. So your SIPP actually grows, your personal pension grows by 25%. Okay? So that's what happens there when you put in money into your private pension. Now, can someone tell me why 20%? Why not 10%? Why not 50%? Can someone tell me in the chat or come off your mic?
That the government assumes you're a basic taxpayer, basic rate taxpayer.
Thank you. So the government is basically assuming you're a basic rate taxpayer. They assume everyone's a basic rate taxpayer. That's the 20%. Right. Most people get the 20% and they relax and they're fine. But not you, because you know better, because you attended the tax hack. If you're a higher rate taxpayer, you need to claim the extra 20%. And that's what you do through. What method will you claim it back? I know you know. Tell me in the chat or come off your mic like Bookie. How will you claim the other 20%?
Self-assessment.
The government has self-assessment. Thank you. The government automatically gives you 20%. I always say, note my words. I say automatic, not instant. That means you don't have to do anything about it. If you put money into your private pension, the private pension administrator informs HMRC. HMRC turns around and says, hi, Karen, sorry, we didn't realize you were going to put this money in your pension. So here's your 20% back, which makes basically is 25% of money you contributed. But then you're a higher rate taxpayer, so you want the rest of the tax you paid, you get it through self-assessment. That's why if you're going to put money in your pension, you want to do self-assessment. There are many other reasons you should do self-assessment as well. If you're a business owner, if you've got a limited company, if you've got capital gains either from selling a property or from selling shares, if you have side hustles that pay you income, especially if it's above £1,000, so many reasons. If you've got rental property, you've got to do self-assessment. I do self-assessment whether HMRC asks me to do or not is really important, because that's my opportunity to claim back wherever I've not claimed. If you've got like professional expenses, You can either use my video and claim it through their usual form. I think the P87 form. But if your professional expenses are above £2,500, then you need to do self-assessment to claim it. Okay. Any questions on pension allowance? I'll pause for any questions. If you have any questions, just come off your mic, ask. I might not be able to see the charts. Just come off your mic, ask the question, or just crack onto the next.
The self-assessment, is it on the gov.uk website? Or?
Good. So self-assessment, there's gov.uk. My preferred way to do self-assessment, there's a form for self-assessment. My preferred way to do self-assessment is to use an accountant. Basically, I'll tell you why. We know what we want to include in self-assessment. The accountant knows the forms. I've done self-assessment once. I think it was a whole waste of my time. I think I should have used my time much better. But you just have to tick boxes, include what you've spent and all this kind of stuff. So there's a form for self-assessment. I could share it in the group, but I prefer to use an accountant. I think it costs me about $240 or $250 every year to do self-assessment. And why I prefer that is that if there's a tiny change or dot or whatever the government has changed in self-assessment form, the accountant knows. They deal with it every single day. In fact, I've spoken to my accountant today. And also there's just that second layer of if HMRC writes back and says, oh, there's this issue, you've got someone who's dealing with that. So I don't call HMRC on the phone. No, I just forward it to my accountant, say, hi, can you sort this out? That way you're maximizing your accountant, not for tax strategy alone, but also in filing the paperwork. Now, the other reason why it's really important is when it comes to things like, thank you, Victor. When it comes to things like, trying to remember something here. Why, not self-assessment per se. Deadlines. Some of you are very good and you're very organized. But my accountants, they start reminding me 7 months to deadlines. To start reminding me, oh, look, hey, you've got to file your taxes. Oh, can you send out this document and all that? Because if you miss the deadline, you've got an automatic £100 fine from HMRC. If it's too late, then, or if you get your self-assessment wrong, you make a mistake, you also get a fine. But the fine then depends on whether they think it's deliberate or whether they think it was done on purpose. But either way, there's fine. In fact, they've introduced one they call recklessness. They'll say if you make a mistake, now they fine you for recklessness. So that's why you just want to have that extra layer, an accountant. That says, so if you pay an accountant $240 or $250, even if it's $300 for the whole year to file your self-assessment to avoid any issues, I don't think it's a waste of money. If you want to do it by yourself, you can do it by yourself. I'll share the form in the group as well. I've done one for my wife, not myself, obviously. I've done one for my wife. This was 2-3 years ago, and it was all right, but it's a waste of time. Self-assessment deadline is usually October 31st if you're submitting a paper self-assessment. If you're submitting electronically, like I hope everyone here will be doing, then January 31 is the deadline.
So I've got a question and I can't find the raise hand option.
Right, go for it.
So I started locuming last year, but I'm wondering, can I put money into my NHS pension through my limited company, or has that time gone?
Right, so you can put money into your limited company. You can't obviously put it for the tax year that has gone, but you can put it now. So if you put money now into your limited company, it's going to so if you put money into your limited company pension, it's going to count towards the current tax year.
Okay, so I've missed my NHS days. Okay, fair enough.
But that's not the end of the story. Have you heard of carry forward?
Is this the one you can do for 3 years?
Thank you. So you can use up your allowance. Like some of you hear this and think, oh, I don't know, I should have used my allowance last year, last 2 years. Now I've got plenty of money coming in, but I've not used up my allowance. And by the time I use up my allowance, I'll hit 60K. No, all hope is not lost. You can use up the allowance from the last, you can go back 3 years and use up whatever unused allowance you haven't used. So there you go. So don't worry, if you haven't used last year and it's gone, use what you can use in this year and work out what's left from the previous year. So that's basically how much did you use up of your pension allowance. That would be basically 60,000 minus what you used. You can use up all those allowances as well. So you're allowed to do that. Lovely. Right, okay.